Hey guys, today's video is part 3 in our series explaining important stock market concepts using Call of Duty Warzone. In today's video, I want to explain what a trade is and the different trade types you can use to purchase an investment. Let's jump into it. What's up, Misfits, and welcome back to another episode of Misfit Money, a series where we explain personal finance and investing tips using video game analogy. This is our final episode in our 3-part series using Call of Duty Warzone to explain the stock market. Part 1, we talked about the players that make up the market and gave a general idea of how the game works. Part 2, we talked through the types of investments that are available for you to purchase. And today we're talking through the actual process of purchasing an investment by explaining what a trade is and the types of trades available to you. Let's start by talking through what a trade is. I know you know that a trade is exchanging one item like cash for another item like stock, but trades in the stock market work a little bit different than your classic zombie apocalypse barter. In the stock market, you'll see each security has something called a bid and an ask. The bid is what the buyer is offering to pay for a specific investment, and the ask is what the seller is asking you to pay for their security. The best way to think about this is when you ask your wife or girlfriend what she wants to eat for dinner. And then you end up going through this whole dance of you suggesting places and her telling you if they're okay or not. What's important to understand here is that one of the two parties, typically going to be you, will need to jump to the other party's side of the exchange for a trade to occur. Someone has to give in. Essentially, one party will have to give in to the other's demands or nothing's going to get done. Most people are used to thinking about stocks like Apple, where the difference between the bid and the ask is 1 cent. This happens for investments that are highly traded, but the bid and the ask difference isn't 1 cent in all investments. Depending on the investment, they can vary by a lot. Think of it this way. When you're picking a restaurant with your significant other, the discussion can be very closely related, like which Italian place do you want? Or it can be wildly different, like I want Indian food and she wants sushi. So how does the exchange occur? Well, that's where a Warzone explanation comes in. When you're making a trade in the stock market, you have various ways of sending your order to the exchange. Essentially, different modifiers to your request for a stock or a security. They are a market order, a stop order, a limit order, and a stop limit order. We're going to explain all of these using the different game modes in Warzone. Your market order is like your solo queue. A market order is when you send a trade request in and say, give me whatever the next available price is. So if you're selling, you get whatever the bid is, and if you're buying, you pay whatever the ask is. You jump to the other person's side of that bid-ask exchange. You are 100% subject to whatever the market is doing at that time. Just like in Warzone, you're 100% subject to whatever the drop path is, the circle location. It's essentially whatever the game is giving you. And I know what you're thinking. Maverick, when you drop in, you can still control when you rotate and how you rotate and if you want to start a gunfight or not. And you're right. But that's like doing all of your research on a specific investment. You can do your best to play the game in the best way possible, but it doesn't change that you're subject to whatever the solo match decides to throw at you. Remember, you get one gulag. And if you're out after that, you're done. It's you and just you. This is what your market order is like. It guarantees that you get to participate in the game. It doesn't guarantee the price you're going to pay. We call that it guarantees execution. Now you can try and put a modifier on that trade to help you as you face the full weight and measure of the stock market. The first way you can do that is you can place a stop order. A stop order is where you dictate a specific price that you want the investment to reach before your order goes to the exchange. This is your duo queue in Warzone. In duos, you've got a little more control over what the game decides to throw at you. You get a bad rotation or you die in the gas, it's not the end of your game. Your partner can buy you back. It's a measure of control over the market. Here's an example of a stop order. Let's say you bought an investment for $100 and it's done very well for you. You're up 50% on it, so you now have $150. You want to hold on to it, but if it starts to lose value, you want to try and save some of your profits. You could put a stop order in at a specific price, say $130. If the investment starts to pull back and it hits that $130 figure, your modifier is triggered and the order is sent to sell the investment on the exchange at the next available price. Now the stop doesn't guarantee you're going to get $130. You'll get whatever the next available price is, which could be lower than $130. The stop is essentially holding your market order back until a specific parameter is met, which is the price, and then it unleashes it to the exchange. The next trade type we'll talk about is a limit order. A limit order is when you specify a specific price you're willing to receive or give for an investment. It's like saying, I'll buy XYZ, but only if it's $20 a share or better. Where a market order guarantees you execution, a limit order guarantees you price, which means it may not execute. Think about this as your trios queue in Warzone. Your team has a lot more control over what happens to you during the course of the game. You've got multiple people to revive teammates, you've got a collective group of cash, and you can split up to better respond to what the game throws at you. The limit order is going to provide you more control over what you're willing to accept from the market at any given time. The final trade type is a stop limit order. This order gives you the most control over what you're willing to accept from the market. This is your quads in the Warzone world. You've got the most control and ability to dictate the terms of what the market gives you. A stop limit order is when you dictate two prices, one for when your order activates through the stop, and a second for the price requirements that you set. Here's an example. Let's say that you want to buy an investment when it really starts to take off, and you believe that'll happen when it hits $100 per share. So you place a stop limit buy order with a stop price of $100, which is when the order activates at the exchange. And then you place a limit price of $110 per share because you don't want to spend more than $110 on this specific purchase. What you've essentially done is you said, I want my order to activate when XYZ stock hits $100 per share, but I only want to purchase it if I get the price of $110 or better for each share that I'm buying. If the stock's price is below $110 per share when your activated order hits the exchange, your trade will execute at whatever the price is below that threshold. If by the time your order activates, the price of the stock has jumped above your limit price, say $125, your trade is not going to execute. Remember, the limit order guarantees you a price, not guarantees the execution. It's a market order that guarantees you your execution and not a certain price. Just like when you add more people to your squad in Warzone, you have more control over what you're going to accept from the game. You have partners there to revive you, buy you back, give you utility items or UAVs, whatever it might be. It's not just you against whatever Verdansk throws at you like it is in a solos queue. If you've played enough Warzone, you know that sometimes, no matter how many players that you have in your party or how much cash you have, the world just moves against you and there's nothing you can do. The same thing can happen in the market. Even when you use stops or limits, the market can still move against you in such a way that there's no winning. The different types of restrictions that you can place on an order aren't guarantees of success defined by making money. They're just ways for you to take better control of how you want to interact with the market. You can dive in with only the concern of being in the game, which is a market order, or you can tiptoe in using something like a stop limit order. No one trade type is quote unquote right for all circumstances. Different trades are good in different situations, and it's up to you to prioritize what's most important to you at that specific time. Is it price or is it execution? And then you can decide what trade you're going to put in. There you have it, Misfits. We've wrapped up our 3-part series explaining important stock market concepts using Call of Duty Warzone. Right now, you should have a basic understanding of how the stock market works and an understanding of what types of players exist in the stock market. We've talked through what are the types of investments that are available for you to purchase, and lastly, we covered what are the trade types you can use to actually purchase those investments. If you've enjoyed this series, do me a favor and go ahead and click that like button. This has been a blast to make, and we've got a lot more personal finance tips coming to the Misfit Money playlist, so make sure you're subscribed for that. If this was your first time stopping by, thank you for spending some time with me. And to all my other Misfits out there, take care.